Good morning. It is February 4th, and we've had a pretty interesting two trading days in the last two trading days in the stock market. Friday, we had a market that was rallying in the morning, and then the tariffs were announced, and it really started to drop. It dropped like 1.6% if you measure the high of Friday's trading to where it ended up closing. And then yesterday, it was a roller coaster. The tariffs came into the morning trading with tariffs being the big issue. And if we look at the NASDAQ, especially, and we look at I'll look at the 5 day, you could see that we really dropped going into Monday and then it rose. I mean, we ended up fairly close to even, or I should say closer to even. It was still down because some big names were down in value. So it's been a roller coaster. And today looks like we are going to open fairly flat. Where's the market going to go? I cannot tell you, but we're going to find out in about a half hour. So hang tight, and that will be revealed by the market. Overall, the market's presenting opportunities. There's certain sectors and industries that have been left behind for a couple of years and now look pretty darn good, given that we are seeing a pretty good rotation that I'll explain in a few minutes. So overall, let me take a peek at Asia. I like looking at Asia since it's on the other side of the world and it does its trading well ahead of our trading. And I'm not quite sure if China is open. I know they have their New Year celebration. Looks like it's trading down in Shanghai. The Nikkei is up, and okay, nothing big on the China side. So we'll go back to crypto. Bitcoin is under $100,000 per coin again. All right. I bought some crypto yesterday, took advantage of low prices, and I'm glad I did so. If in my plan, when Bitcoin is below 100,000, I'm dollar cost averaging. So at 99, I will, or anything lower, I'll probably dollar cost average into Bitcoin today. Ethereum is also down. I'm holding off from buying any more Ethereum. And I started a small position in Solana. I'm just going to hold tight on Solana. I just wanted to see how it would go. So far, the Solana coin has been dropping in value. And it's a smaller coin. Bitcoin is the big market cap. And I feel most comfortable buying into Bitcoin. So the U.S. markets should open flat. Tomas, good morning. Good to see you. Thanks for joining. And let's take a look. So we got futures, and the Dow has been performing okay year to date. It's up 4.41%. I think it's leading the S&P and the NASDAQ, which is good. The Dow tends to be these more established businesses, older businesses, more value stocks. And we've been 2 consecutive years of the stocks, high growth stocks have just been stealing the show, just doing great. And it's a good idea to find good growth stocks when they're well priced and then watch your investment rise in value. The Dow happens to be, hey, once you've earned your wealth, you've grown your wealth, keep your wealth. It's good Dow stocks tend to help you keep your wealth, grow it at a reasonable appreciation level, and get some nice dividends in the process. So I like Dow stocks. Dow stocks, as I get older and I want to preserve my wealth, it's a good idea to get good at investing into Dow-based stocks. So it's good to see the Dow year to date is doing well. Looking at the heat map. I like looking at the heat map because it really causes us to really focus where the action is taking place. And you could see the rotation. NVIDIA's been giving up a lot of value And if you measure from the recent high to where it's at now, it's lost more than 19% of value. And um, that is got to be scary for an NVIDIA stockholder. News stories have come out, of course, the DeepSeek and other things. And at a 19% correction, this stock can really continue to drop. I don't see any stories out there that could cause it to really begin to rally like it's rallied in the past. So we'll see where NVIDIA goes. This will be one of the big stories of 2025. Will NVIDIA continue to go up, or will it pretty much kind of give up its appreciation curve and begin to flatten out, or maybe even worse, come down? If we have, I know we have one hyperscaler announcing today, which is Google Alphabet. They're one of the big cloud businesses that buy a lot of technology that would be buying from NVIDIA. If they comment that, hey, we're going to slow down spending, NVIDIA's stock price is going to come down. It's going to come down. I don't know. Continue to go down, I should say. The other stock that is getting hammered in, Tomas, I see your comment. You don't see an opportunity by NVIDIA? No, I think so. Let's go back to this chart, which helps me kind of show you where I'm at. So first, I think NVIDIA is overpriced by like 25% or so. And if you look at the annual, right, what we want is, let me try to think of another stock that I would want to compare against. So let's say, so this is completely out of industry, but I think I'm going to get what I'm looking for here. So United Therapeutics is a biotech company. Over the last year, it's done 66%. Over the past 5 years, it's done 252%. So it's been a real nice winner. It's going to be a little Monday morning quarterbacking, but just to make the point, obviously you want to buy somewhere around here, and I'm a dollar cost average guy. So buying in this neighborhood and then watching your investment appreciate, especially since it's been appreciating reasonably or recently. Over the 1 year, it's up 66%. NVIDIA is really hard because when you look at the 5 year, you had this real fast run up, right? Which was incredible. It's up, 9x. So the price of the stock is 9 times what it was, before 2023 started. So a lot of the stock price is based on an expectation that NVIDIA was really going to grow and grow for like 10 years. And that's kind of impossible, nearly impossible. So when you ask, is it a good time to buy? The answer is no. One of the points I'll make is if you look at from June to now, the stock's down 14%. So if you invested back in June of 2024 to now, you're probably very dissatisfied. Like, oh man, I lost a lot of my investment. And there's a lot of downside risk on NVIDIA, in my opinion, because it's gone up so much, right? If it came down, right now it's a $2.86 trillion market cap. If it came down, let's say to $1.5 trillion, you lost 40% of your investment. There's just a lot of, I think there's more stories or more paths for the NVIDIA stock to be a negative stock than there are for it to continue to be a positive stock, because the price of the stock for NVIDIA is based on an expectation that was somewhat established a year, 2 years ago, that they're going to dominate GPU businesses for 5 to 10 years, and it's going to continue to grow. Well, the stories recently are that with DeepSeek finding a way to do large language models and do the AI business for less expense, less technology, less energy. Okay, well, that really changes the picture for NVIDIA. If there isn't going to be crazy demand for its GPUs going forward, what does it do to the stock? Well, if you're not going to have that incredible demand for your product anymore, you're probably going to have more like lower growth, rational growth, and you're not worth 2.9 trillion dollars. You're probably worth a billion, maybe 2 billion. Either scenario, the stockholder is going to be holding the bag. What's interesting is you saw the incredible growth, but even on the 1 year now, NVIDIA is down to 68% appreciation. And as this compare, right, as we compare the stock, as we reach this June timeframe and you begin to see negatives, if the stock doesn't go up, this stock's going to go from the most desired stock, which it was a year and a half, 2 years ago, and people that bought it made out like kings, to everybody wants to get out. And a lot of smart money has already left NVIDIA. And we'll see. We will see. I did begin to question the NVIDIA valuation around this time. And from the time I started to question it, and you can see my videos, the stock hasn't done anything. So it wasn't like I was imagining fundamentals that were pricing the stock too high. That's where I started to really question the stock. And that's my answer to you, Tomas, is my answer is I would not buy NVIDIA stock. I'm actually shorting NVIDIA stock. So that's my position. Shadow Guy, good morning, man. And Omar, good morning. I think this year will be the most unpleasant, unpredictable year to invest, most fearful. Omar, I respectfully disagree. 2022 was pretty tough. And I can tell you the scariest moment I've had in the last 10 years was when we had this COVID pandemic and we saw the stock market crash. Oh man, did it crash. Let's go back in time. Let's go in the time machine. Let's go in this time machine and go, all right, here we are. Hey, we have this pandemic coming. We have this virus. We have COVID. So the stock market in a month and a half dropped 30%. That was scary. The whole pandemic was scary. I'm like, what is going on? I went from meeting people, visiting clients, traveling to nothing. My kids were sent home from school. They had to go on Zoom. There were people dying, people on ventilators, and the stock market crashed 30% in a month and a half. So respectfully, that was pretty scary. So what we're faced with this year, 2025, are you kidding me? This is nothing. In fact, I find it interesting. And there's an opportunity. Volatility is, in my opinion, a friend of the investor that's prepared. I'd rather have volatility. I'd rather see stock prices go up and down. I'd rather see some stocks being priced incorrectly, inefficiently, so that the investor that does their homework takes advantage. And what I'll cover today is where I think there are a few advantages in the stock market to the investor. I'll point those out. So thanks, Omar. You're a regular, so don't take it the wrong way. It's always, the stock market will always be a place where you have to take risk. So I can understand that, risk comes with a little bit of tension, but hang in there. I don't know how old you are. I don't know how long you've been investing. But let's see what we get this today in the stock market as well as this year. Genetic Smite. So you were considering NVIDIA for the first time, trying to short a stock. So shorting is super risky. The one thing I would say about shorting stocks, right? And I'm not an expert on shorting stocks either, but the thing about shorting stocks that could be quite painful, right, to an investor. Here's NVIDIA. And if you short NVIDIA right now, it's $2.86 trillion. So to say, well, this thing can double in value, man, that is really hard to imagine because then they would be close to a $6 trillion market cap company. They would, I don't know what, I think the whole S&P is like 36 trillion, 38 trillion. So right now, these guys are like 8% of the S&P, 7%. If they went up to 6 trillion, they'd be like 15%. That's right now, it's ridiculous. It'd be incredibly ridiculous if they went up that much. So the upside on a short position wouldn't be all that risky, in my opinion. Again, I'm not providing any financial advice. I'm not recommending you short any stock, especially NVIDIA. Now, when you deal with a small stock, like let's say we go to GameStop, which was the stock that broke a couple of hedge funds that were really, really good. So these guys, they're tiny market cap, 11 billion. So could you expect a company that's 11 billion potentially double? Yeah. I mean, who's going to notice from a big macro level if GameStop doubled in value and went up to 22 billion? Yeah, big deal. It's still nowhere near any percentage of the S&P or the Dow or the NASDAQ. So that's where this stock just took off. And the investors that got squeezed, the stock went from like $3-4 up to $81. So I think it was Melvin Capital that got crushed. So stocks like these scare me because, hey, this stock, if it rallies, it's going to crush my position. It could be like, hey, I shorted a stock and I shorted $1,000 of shares. It takes off and I'm like, oh my God, I just lost $50,000. So that's not something I want to touch. Whereas the NVIDIA situation is, it would be super incredible for it to double again. But my worst case scenario would be I short $1,000 of NVIDIA stock, or 5,000. You fill in the blank there. Well, let's just follow 1,000. And let's say it did double in value, which would be super incredible. I lost $1,000. Okay. Well, it's not too bad. I made 158 grand in January. I had a very good January. So in the scheme of that, it'd be immaterial. I like using short positions to kind of exercise my rationale. Like if I'm seeing something that's an imbalance or inefficient situation, like I'm seeing with NVIDIA, I'm also seeing it with Palantir. But to this point, the Palantir stockholder is winning. It's whoever owns Palantir. Congratulations. I tip my hat to you, but I'm not the only one saying that Palantir is expensive. So that is NVIDIA. Super interesting. Carlos, good morning. We recovered from the tariff scare. Yeah, man, that was like, it was crazy. So on Friday, President Trump announced the tariffs. It didn't even get that ugly. Like, we didn't have like 2 weeks of like just negative press, negative. It was like really 2 days of trading were affected. And now we're on a 30-day hiatus. Like, okay, we're trying to figure this out over the next 30 days. So it was somewhat of a roller coaster, man. I showed the graph earlier where, this is kind of like the tariffs. On Friday, the tariffs were announced and the market really came down. And overall, it came down 1.6 on Friday, and then it opened much lower on Monday. So net 3.5 drop in the NASDAQ due to those tariffs. But then once it was announced, hey, it looks like the leaders of those countries are trying to work things out. There we go. The stock market went up. So yeah, it was kind of like the shortest, tariff scare that we've had. Sometimes those things, kind of last a while. So we'll see if it comes back. For all we know, we let our guard down and then these tariffs come back. Shadow guy. I typically short the NASDAQ as a whole rather than just NVIDIA. Yeah, that's a different way of playing it, which is, can you see the NASDAQ doubling in value on you like overnight or in a month? No, That just is really highly unlikely. So you're probably managing a risk because, can the NASDAQ go up 5% in a month? Yeah, that's possible. Can it go down 5%? Yeah, it's done that. So interesting. Good luck with that. Angelus. Do you like Pulte stock? I could take a look at it. Let me put it on the list and I'll look at it a little later. I wanted to look at the stocks that announced earnings. So I'll get through that section and then I'll look at Pulte. So hang in there. All right. So we got a market that's a little bit of a roller coaster ride. Hopefully we have some thrill seekers out there. But overall, it's still on an upward trajectory. If we look at the 1 year, this year, looking at some of these big moves we've seen, we're seeing a rotation out of NVIDIA into other stocks, as well as other investment classes like cash and other things. Apple had a tough day. I think that there's the tariffs that got announced were Mexico, Canada, and China. And China was the one where it was only 10% versus Mexico and Canada were 25%. And the one from China, there's no negotiation. It's not going anywhere. And I think that does affect Apple. And Apple hasn't been growing. I mean, I think it's incredible that Apple maintains their high valuation because they're not growing. I mean, PayPal, as we'll cover a little later, PayPal is growing better than Apple, and PayPal is getting crushed this morning. If it's still where it was at when I last left it, so we'll see. We'll see where Apple goes. Tesla got hit hard because Canada put 100% tariff on Tesla. They're like, man, we're going to go after Tesla if President Trump is coming after Canada. And some of that money, because these are big caps. This is 2.8 trillion, 3.5 trillion, 1 point something trillion. Those are trillions, okay? So if you see those stocks going down by these substantial amounts, then you have Microsoft, 3 trillion. A 1% move there is 30 billion. A 3% move here is, call it 80. Got to keep my numbers straight. Would be about 80 billion. 3% on Apple would be 9, 10 per 100 billion. So we have $250 billion or so among these companies. And if you put Broadcom in there, which is almost, I think it's $1 trillion valuation company, we're up to like $300 billion of capital moving. And it found a home in Meta. It found homes in Visa, MasterCard, Walmart. These are staples that showed up yesterday. Healthcare, I think, is really setting up to be a winning sector this year. I'll take a closer look, but some of that capital leaving some of these big caps, and Google, again, Google's $2.4 trillion market cap company. Those are some big dollars moving from one place to another, and they're finding homes in other sectors. So I'm seeing that as a positive because the Magnificent Seven technology stocks have just been crushing the market for 2 years, which is great. I mean, if you're an investor in those companies, awesome. But it becomes imbalanced. So like only 10 companies, let's say, are 80% of the value of the market. The companies outside of that top 10 list, they're just so undervalued. It's really, it's an inefficient market. It's imbalanced, and that creates an opportunity for the prepared investor. All right. So speaking of sectors, which sector is leading the pack? Where might there be opportunities to invest? Now, I was listening to a very credible show yesterday with some economists, and they were saying healthcare is the number one sector. And I go, really? Well, Stock Analysis, and I'm not going to argue with it, they have Communication services, which has Meta, which has been up close to 20%. These guys are just crushing it. And they're a massive cap. They're a 1.7, $1.8 trillion market cap company. Google's doing okay. Netflix is doing great. They had a great earnings announcement. AT&T is doing great. T-Mobile's doing great. Verizon's doing great. So communication services is leading the pack. They're doing great. Year to date, it's up 10%. That's phenomenal. Meta is working. Meta is in a great spot. They have a great business. They grew 22%. They have very good earnings announced. They're spending a lot of money on AI. AI, they're going to win. It's kind of like heads you win, tails you win, Meta, because if AI becomes super important, but it's really expensive, Meta wins because they have so much money, they can outspend just about anybody. If AI is affordable and everybody can do it, Meta wins. Why? Because they don't care. Like whoever advertises on Meta is probably going to use AI to do their advertising. You're probably going to see a lot of AI application innovation reach Meta. Their Meta AI application, where you can use it comparable to ChatGPT or Microsoft Copilot or Google Gemini or DeepSeek, it's very competitive. I used all four. You can see I've got the different apps here. I use DeepSeek. I've been playing around with all the big ones, and Meta AI is as good as any of those guys. So communication services has been really working. Now if you look at my portfolio, my biggest position's Meta. Number 2 is Google Alphabet. I've been building a position in Upwork, which is in that sector, and among others. And so I'm good with that sector. I don't want to get too much more invested in that space, but I think, it's going to keep working for 2025. I don't see anything getting in the way there. Healthcare. This is, I think, my best opportunity going forward, because if you look at the last 5 years, especially 2023, 2024, healthcare was left behind. It didn't participate in the great appreciation runs that we've had in technology, communication services, and discretionary, consumer discretionary, as well as financials in 2024. So I think their valuations here are discounted. The metrics look great. Fundamentals, the PEs look super low. Pfizer announced today. We'll talk about that in a bit. But there's just a long list of stocks in healthcare that could really, really win in 2025. And when you think about tariffs, do tariffs affect pharmaceutical companies? Nope, they don't. Pharmaceutical companies tend to produce their product domestically because they need to be near the markets where those pharmaceuticals will be consumed. So healthcare naturally is a tariff free or resistant, or there could be a real bad tariff battle and healthcare doesn't get affected. You do get affected if you're making tangible products, like you're making cars and stuff. You can get severely affected. But within healthcare, they're making drugs. Their input cost, once you've created the drug and you have all that intellectual property, making the drugs it's a very profitable downstream business once you have effective, successful drugs in your portfolio. So that's going to be a really interesting sector to watch. And I think that's where I'm putting a lot of focus on, and I'm buying into stocks within healthcare. Materials has been working. Financials continue to work. So that's the top of the stack. And technology continues to be, some stocks are in correction mode. NVIDIA down 19%. Apple, you saw a really bad day yesterday. At the very beginning of the year, Apple was also really selling off. So technology's giving up some of the gains they've had over the last 2 years, but don't worry, it's still number one. Still number one over the 1 year because they did so well. So those are the sectors that are really clicking. So earnings were announced yesterday. Palantir announced they announced, and their earnings were so good that the market has just gone crazy over them. See where they're at. They're up 22%, and they're already a pretty big cap company, $190 billion market cap. Incredible. Congratulations to the Palantir stockholders. And a lot of little companies announced yesterday, but today we had some names. Merck announced before the open, Pepsi announced before the open, Pfizer, KKR, Spotify. Interesting. Well, there's a lot of stocks that I want to look at on this list. And after the market closes, Google Alphabet, that's going to be a massive one. AMD, that's a popular one. A lot of people ask about AMD. They feel like, hey, that's a way to play semiconductor. Then Amgen, which is in the healthcare biotech industry. So let's take a look at some of these. So we saw that Palantir just crushed it. I'll take a look at that. I want to look at Merck, Pepsi. I've already got Pfizer open. I've got PayPal open. KKR would be interesting to take a peek at. Spotify. I'm a big Spotify fan. I enjoy the service so much. And I know that PayPal announced. Why are they not listed toward the top? I guess PayPal's lost so much market cap. Anyway, PayPal announced. I'm just missing it off this list. All right, so let's get cracking here. Let me take a peek at announcements here. So Axel's Experience. I want to enter. Amazon seems a little bit discounted. Okay, let's take a look. Sumitomo is actually a pretty big name in Japan. I agree. I just don't have a lot of value to bring to that situation or that stock because I just don't know Japan all that well. So Shadow Guy. Okay, so Palantir, yes, I'm happy, but they keep crushing the stock, so falling off a cliff. Yeah, we'll see. I mean, it's working. It's working. So enjoy the day, man. Enjoy the day. All right, so Palantir announcements. The thing about Palantir that, and I'll state my position that way you understand my point of view is it's incredible their rise, but their numbers, the rise in the stock price, but the numbers are not incredible to me. And I'll compare them to like the Nvidia rise. I thought was quite rational in the beginning because they were growing like 150%, 200% on a big revenue number. When we look at Palantir, they're not that big. 2.6 billion in revenue. That's not a big company. And they are growing nicely. They're growing quite nicely. 30%. I think the most recent quarter, they grew even better. I think if you look at the quarter that they just closed, they grew like 36% or something. That's really nice growth, but it's not a massive number. It's not an incredible feat. Like Meta, as an example, they're like 150, 160 billion, and they grew at 22%. 22% on 150 billion is 32, 34 billion dollars of growth. That's like 10 times plus. That's more than 10 times a Palantir overall size. So to me, the Meta growth is more incredible than the Palantir growth. I'm just kind of putting it in context. The other thing that's hard to get my head around is their PE in 24 was 509. Oh man. And then the forward PE for 2025 is 185. Whew. Expensive. Most analysts, if you watch CNBC, if you watch YouTube, I'm not the only one saying it's an expensive stock. And the analysts on stock analysis believe it's priced 39% too high. The stock's just crushed it. Oh man, 1 year, 508%. That is awesome. Congratulations, stockholders. We'll see how it flourishes going forward. So that's just really the story that I'm sticking to, which is, the company is doing well, but I can probably find 10 companies that are about this size that are growing at these rates, but they're not appreciating this fast, their stock price. So I'd rather buy those companies. I think there's really good value in software, which is what Palantir fundamentally is. It's a software company. So congratulations, Palantir stockholders. You should enjoy the day. All right, so let me jump into some stocks that I already did some deep thinking. I already recorded a video and released it on Pfizer. What's going on, Pfizer? So Pfizer's up nicely, 1.77%. This is a value stock. This is a stock that's growing a little bit and is set to grow slowly in 2025, 2026. $151 billion market cap. This stock has seen better stock price in the past. $58 a share. It's down to 26. And the story of this stock was they created vaccines and they had a really run up of their stock, made a lot of money, made a lot of cash, and now they've been sold off. So I like this setup, which is, hey, you're going to give me a forward P of 9 for 2025. We just saw Palantir at 100 and somewhat, 185 or something. And you're going to pay me a dividend of 6.44%. Man, there's a lot there to like. Analysts believe it's discounted by 20%. The discount I have on the stock is 30%. I like their growth. Specifically, when you break down, they made the turn and started to grow, looks like 3 quarters ago. And they grew nicely in Q3 and very nicely in Q4, if you look at the quarterly. So I like that. And they were really profitable. They expanded their profit, their net income by almost 4 times. So it looks like Shadow Guy, you want to go over UBS. We will go over UBS. So Pfizer fundamentals look really attractive to a value investor. Again, as I reach older age, I'm 56 and I'm like, okay, cool. I got a good portfolio. How do I grow my wealth, but also how do I conserve my wealth? I've worked hard for the money that I've made. I've worked hard at investing it correctly. And Pfizer, I believe, is a good stock for me because it's going to appreciate at a nice rate. It's going to give me good income. And it's somewhat of a safe stock. They make so much money. It's hard to ignore it. And if you look at tariffs can come into the picture in a very big way. And it's kind of a who cares moment. Like, who cares? These guys, the tariffs don't affect Pfizer. They make drugs that people with cancer need to have, and their insurance covers it. They have drugs that treat certain conditions, and Pfizer's good. They don't care about tariffs. They may receive tariffs from other governments, but I don't think so. It's very politically unfavorable. If, let's say, a foreign government said, hey, we're going to put a tariff on a drug that some people in our population need to have in order to stay alive or improve their quality of life, that would not be very positive. They'd probably be like, you guys are a bunch of jerks. These poor people already have that disease, and now you're making it more expensive for them. But it's different when you have a discretionary product like a car. Hey, a car is going to cost more now because of the tariff. So Pfizer is going to avoid tariffs. If tariffs are used by the president for the next 4 years, it's not going to affect healthcare. The other story out there is JFK, or not JFK, the Kennedy that's in the cabinet for the president. He does not like vaccines. He doesn't like pharmaceutical companies. He's more into like eat right, exercise, and live healthy kind of attitude. Totally understand. But try saying that to a person with cancer. Hey man, you got to eat right and live right. And that person's facing, their mortality rates really in question. Yeah, you're just I think if they stepped into that situation, the administration would probably see their approval ratings really drop, because you shouldn't get in the way of somebody seeking the best medicine and treatment for their illness. I think the whole vaccine business from Pfizer is pretty much in the rearview mirror. They don't depend on it anymore. So they shouldn't have any kind of negative headwinds going forward. So Pfizer, I think, came in very respectably. The stock's up a little bit over the 1 year. It's flat over the year to date. It's flat. So this is not exciting like Palantir. This is a good, boring value stock. This is a company that is going to be here in 10 years. It'd be very hard to imagine the future without Pfizer. They are really important for, the health industry. They focus on certain segments of the pharmaceutical industry, and they're good at it. They've been around for a long time. So Pfizer, keep growing. I want them to grow faster than they're guiding. The guidance they put out there was that they were just going to grow a little bit in 2025. And maybe they set the bar down so they could beat it. But I'd like to see better growth in 2025, similar to the growth that they were experiencing in the last 3 quarters. If they meet that, if they exceed and raise, this stock's really going to work in 2025. So that is Pfizer. Our friends at PayPal. Whew, man, PayPal's having a bad day. Having a bad day. This is like the movie Hangover. The day, they wake up afterward, and they had a good time, the night before, but then they're like picking up the pieces and saying, what the heck happened? And they find a tiger in the bathroom too. Over the 1 year, this stock's worked, and this stock was worth a lot more not too long ago. They continue to be, in my mind, a very valuable company because they produce a tremendous amount of free cash. When we look at the most valuable businesses on the stock market, you look at Apple, high free cash, high free cash, high free cash. I can go down the list. High free cash flow is the common situation with all these super valuable companies. Meta, high free cash flow and growing. So when we look at a PayPal, it's high free cash flow and growing. So the disappointment was on the growth numbers. The growth numbers, you can see this decelerating growth rate. That is concerning. I agree with that. Top line revenue growth tells us the company, their products are in higher demand. They're getting more customers. Their products are working. The company is growing organically. That's what the top line tells us. If revenue is slowing down, that could be a symptom of a bigger problem. Like, hey, is the product undesirable? Now, as we look at the overall product portfolio for PayPal, there are some things that I really like. Venmo. Venmo is super popular. I don't know anybody in my personal community that does not own or have Venmo as an app on their phone. It's what I use to transfer money to friends. Once in a while, I use Zelle. It's only when I have to. Usually people that are less technology savvy are on Zelle. They're like, oh, my bank offers this and I use it. Okay, cool. And I set it up and it was pretty easy. So I have Zelle and Venmo, but I use Venmo like 90% of the time. And some people don't use Venmo, but I use it. Now, that's an exciting business. It continues to grow, and they showed that they continue to grow volumes on Venmo. The other business that's exciting is the buy now, pay later business. That's working. And they're setting up these really good partnerships. The biggest one being with Amazon Prime. Very good move. That's in their earnings announcement. Last, that's kind of a hidden business that doesn't get a lot of attention is their crypto business. PayPal has its own coin. And PayPal, if crypto becomes more common, um, from a transaction perspective, people buy stuff with crypto. PayPal may find itself in a very enviable position where they have the payment systems that are very common on websites, and they're able to do crypto transactions. That'd be super interesting. So, top line did not grow fast enough. That's why the stock is getting beat up. That's the bad news. The good news, their free cash flow really expanded. That's good. That's good to see. They actually, for 2024, that's the best free cash flow number they've had in the last, what, 8 years? That's really good news. And if they can keep it up, it's going to be hard to ignore. Now, PayPal is not a dividend stock, but maybe they should pay a dividend. Or they should buy back just a ton of shares. Or they should acquire a company. Hoo-hoo. Acquisitions are going to start, ladies and gentlemen. And with the new administration, companies are going to be able to acquire other businesses. And our friends at PayPal have more cash than debt. They produce a ton of free cash flow. PayPal has been a good acquirer of other businesses like Venmo. That was an acquisition. So maybe they could acquire a couple of really cool companies that make sense for them. And that'd be interesting. Be really interesting. So I am going to hold my shares of PayPal. I think there's just too much value to ignore. I'm sitting on a nice gain, so I'm cool. And I think today's going to be a bad day, but I think as we see this thing play out, I think PayPal is going to end up being a winning stock for 2025 as well. We'll see. We will see, but today PayPal is getting crushed. Mike, the dividend investor guy, you don't use Venmo. All right. Like I said, some people don't. And then RFK Jr. is the guy that's going to go after the pharma business. Thanks for correcting me on that. JFK for sure was wrong. I knew that as I said it. All right. So that's PayPal. PayPal announced today. Let's go back to the list. So Merck, what's happening? Oh my gosh, Merck. Man, bad. These guys are going through a hangover. So they're really dropping off. What are they doing year to date? Well, they were flat year to date. And now today they're really down. What's the story on Merck? So we've seen Merck. We've looked at Merck recently on the live streams, and they looked like a good value stock. So Merck's Gardasil vaccine slowdown in China bites again. So it looks like Merck's soft guidance. The guidance is what sent the stock down. And I would say that Pfizer, also their guidance, I was not like filled with euphoria when they announced that, hey, we're going to be flat in 2025. I'm like, what? Come on, guys, you're growing at like 20 to 30% in the quarter. How could you say you're just going to be flat for 2025? But they said that. Maybe they're guiding really low. Maybe they are afraid of this RFK Jr. guy. And we'll see. We'll see. These guys in the quarter, see, they grew at 6.79%. This is a big company, right? Their run rate's 60 billion plus. So these numbers to me are good. Single digits, excuse me. And then these guys produce a lot of free cash, a lot of profit. They pay a dividend. And they're not showing me the cash, but these guys do better cash than our friends at Pfizer. So, and our friends at Pfizer, I'm expecting they're going to be Pfizer's going to be at 9 billion plus. These guys are at 9.1, possibly higher once they release that number. And their market cap is higher than Pfizer. Pfizer's at like under 200 billion. These guys pay a nice dividend, 3.65. Looks like it's being discounted this year. Fundamentals under 10. You can go into healthcare and find so many stocks that are the PE is really rational. It's a buy according analyst discounted by 40%, growing mid single digit. That's a good buy, man. You can buy technology that's a little overpriced or a lot overpriced, like 185 PE, or you could buy a PE of 10. Which pick your investing option. If you're an investor that's maybe looking to preserve wealth and have a reasonable rate of return, maybe like a Dow like return, Merck, Pfizer, to me, they look really good. Today, these guys are having a bad day. Their guidance was down, but maybe the CEO and company are like, hey, let's take some medicine today, guide down, make sure we're going to exceed those numbers in 2025. That way we bite the bullet now and kind of have more things to report in 2025 that'll cause our stock to rally. Maybe. We'll see. So Merck's having a bad day. Is it an opportunity? So let me look at the heat map. Now the stock market's been open for 20 minutes or so. Looks like NVIDIA is in the green. Apple's flat. That's a little bit of a surprise, but NVIDIA is making a run. Microsoft is flat. Man, Microsoft is not having a good 2025. And Amazon's up, Google's up. The energy complex is up. Looks good. Netflix is up. See how communication services, it's leading the pack in 2025. And they just have these companies that are going to work. Netflix. Will tariffs affect Netflix? No. It's like you stream. How can you? I don't think there's any tax on streaming. So hopefully there'll never be a tax on streaming. That'd be horrible. And then our friends at Google, right? YouTube. You're on YouTube right now. Most of you watching me. And it's going up 1%. So this is working. This is working. AMD's up a little bit. And healthcare is down. Just looks like Pfizer's giving up that gain. J&J is up. But the healthcare space is really down today. In general, I don't know how far down they're down. But looks like in general, the whole space is down 0.18. Interesting. All right. Let me take a peek at the market. And the NASDAQ is up 0.57, S&P up 0.18, Dow down 0.18. Crypto, Bitcoin's at 100,000 per coin. All right. Okay. So that's what's going on. Let's keep looking at some stocks here. And Mike's got a comment on Merck. Let me take a peek at that. So you're looking for Merck. If it hits a certain stock price, you might be going in. Yeah. And I've got a pretty good position in Pfizer. I'm sticking to it. I think I'm good with Pfizer. It's one of those stocks that, hey, it's going to work at some point. Some stocks take a little long, but in the end, over the next 5 years, I'm very optimistic that Pfizer, I'm going to be really glad that I bought into Pfizer. All right. So good time to catch up on comments just so that I don't keep you guys waiting. I've got Pulte on the list, Amazon, UBS. And Joe. So hopefully PayPal does begin buy back stock. Yeah. Or acquire other businesses, because I think acquisitions are going to start. So if PayPal is like looking at acquiring another business that's going to make them better, stronger, more profitable, get into a greater growth trajectory, I'm in favor of PayPal acquiring another business. So We'll see. So Shadow Guy. Oh, they didn't want to let you use Venmo outside the US. Yeah, interesting. Enron had a PE below 10. Yeah, you got a good point, but Enron also had people that were cooking numbers, so that's a different game. Um, I wouldn't. I would hope that none of the businesses that I'm covering today are have a CFO that's creating financials from thin air. Like he was creating financials for 4 consecutive years that had false revenue numbers, and the stock really flourished, and then it collapsed. So that's a different game. It's like a Bernie Madoff, Enron. There was another one called WorldCom back 20 years ago. Those belong in a different category. Those are fraudulent, bad actors in companies, and that does hurt investors. All right, we went over that comment. All right, so let me take a peek at. See, we've got Merck. We just covered KKR, Spotify, and Nvidia. Nvidia it's doing well today. Go Nvidia. Let me look at, I think Shadow Guy wanted to look at UBS, and UBS I think was selling off, and I think it was on soft guidance. When we look at their financials, net interest income did drop a little bit. Okay. Looking at the quarterly, net income. So this isn't filled in, so I'm not gonna go there. So revenue looks really good. It went up 21%. So this is a bank, financial services, and so forth. So the revenue expanded nicely. Let's look at their book value. I like to look at book value for banks. Book value. Book value is expanding. 2017 it was 14. Now it's 26. Year over year here was phenomenal. It was rather flat. Actually went down a tiny bit from 23 to 24. Maybe that's what's not liked by the stock market is what happened to your book value? Why are you not growing your book value? So that might be part of the problem on why the stock is selling off. No analysts cover it on stock analysis. I believe this is a Swiss company, right? So UBS Group AG provides financial advice and solutions to private, institutional, and corporate clients worldwide. It operates through 5 divisions: global wealth management, personal, corporate banking, asset management. Okay. Some of the headlines specific to UBS. See, quarterly profit smashes expectations and $3 billion buyback. So what's the market not liking? Something is misunderstood here. Top line revenue is really good. Dividends okay. I can't put my finger on why the market's selling this off. Over the 1 year, it's done okay. So it seems like they're doing well. If you look at their top line revenue, it's growing. Profit. Let's take a look at their net income. Their net income did drop quite a bit. So net income and book value So net income dropped substantially, and then their book value didn't grow. So that might have something to do with the market not warming up to UBS, and that's why they're selling off the stock. Is my best guess. Yeah, so you're gonna send me the presentation on UBS? Yeah, glad to take a look at it, shadow guy. All right, so that's UBS. There was another question on Amazon. Is it discounted? And my short answer is no. With Amazon, the story why I hold Amazon, I think the stock is fairly priced. It might be, depending how you look at it, might be discounted by a little bit. Like analysts believe it's discounted by 6%. That's close to fair price. So my decision is there's some companies that are such great businesses. I'm glad to pay a fair price on a great business. Totally. Because Amazon's going to be worth more in the future. That's a, qualitative judgment call that I make is Amazon's going to be worth a lot more. They're so powerful. Their e-commerce business and their cloud business is those two businesses are so powerful. These guys are a stock I want to own, so I own it. So it's not highly discounted. It's a very, very valuable company at $2.5 trillion in market cap. Their PE is not cheap, 40, not cheap. It's expensive. And analysts, I can understand them saying 6% discount. Today it's going up 1%. I don't think they're doing really well for 2025, 9.41%. They offered up a nice point in time to buy shares. This is when I started buying a lot, this range. Now, the stock's up 40% over the 1 year, up 9.44% year to date. The stock's working. I'm good with my position at Amazon. I probably wouldn't buy any shares today. Good company, really good company. I think somebody was interested in Pulte, which I believe is a home builder, Pulte Group. And these guys, home builder. Home building is tricky. You got to get in and get out. This stock has really worked because the shortage of homes available due to COVID, people just didn't list their homes. So the resale market has had historic low inventory, which really set up the home builders to be incredibly profitable and grow their businesses. So that's done really well. Now that's rear view mirror, looking through the windshield and saying, okay, what's going to happen to home building? Man, there are a few headwinds, one of them being higher interest rates. The other thing that these home builders were dealing with, especially coming out of 2022, was still a relatively low interest rate when you bought a home. But now, as you've seen interest rates go higher and higher, especially mortgage rates, right? Probably my last time I looked at them, if you bought a home, a standard loan, I think conforming loan is the term they use, you're paying 7%. The house that I'm sitting in, I'm paying 2.5%. So low that I could have paid off my house probably 5 years ago. But at that rate, I'll take a 2.5% loan on my home. And, it's so low, it's ridiculous. A lot of people are sitting on those types of loans, which is causing the biggest shortage in resale market because people don't want to leave those loans and then pay 7%. It's really high. So interest rates are going to be a headwind. Prices of real estate are just so high. People will continue to pay it. When I bought this house 25 and a half years ago, the price itself had sticker shock. So there's always going to be sticker shock on homes. If you want to live in a nice neighborhood, if you want a nice home, you're going to have to pay a lot of money, period. And that was the case 10 years ago, 20 years ago, 30 years ago, 40 years ago. It's just going to be a fact of life. You want to live in a nice home in a nice area, you're going to pay. And just buckle up and get it done is my my attitude around things like that in life. These guys are going to have a tough time because of those higher interest rates and demand. Will demand be there? I know that the inventory of resale is growing. The inventory resale is growing, and that's going to be a competitive headwind against home builders. So, do I expect these guys are going to be big winners in 2025? I don't think so. How about for the next 5 years? I don't think so. I think they're going to have a tougher time. This was just unexpected. I was an owner of Lennar Homes, and I did well with the stock, sold it. But this is not an industry that I expect is going to create tremendous wealth over time. This is cyclical. They're going to have really good periods of time and then have terrible periods of time. When we had the Great Recession, many of these home builders went bankrupt. They had a horrible time. I don't think we're anywhere near something like that happening, but I'm just thinking that, they're going to have a tough time going forward, in my opinion. And it's not an industry that I think builds great long-term wealth. So I'd rather just pass on the whole space for now. And that's my comment on Pulte. All right. So it looks like Nitchix, one of the regulars. What's up, man? What are you expecting about Uber earnings this week? Oh, man. Let me get my crystal ball out. Crystal ball. Well, I believe Uber's unappreciated, underpriced, discounted. It is a powerful company. As we've look at this growth. This growth is phenomenal, right? If you could just mix in the word Palantir in here, this thing would rally 50% in one day. And what's incredible about Uber is look at these sell-offs. Okay. And these are story-based sell-offs. Robotaxi is going to put Uber out of business. Robotaxi is going to take a lot of their demand away. It's not happening. And their growth is excellent. And these guys have become the best experience when people are ride hailing. And I think these guys are going to actually partner with the robotaxi technology companies and compete against whomever wants to compete against them. When you think about a robotaxi, Waymo is the leader right now. That's a Google Alphabet company. And we'll see if Waymo wants to go at it alone and build a franchise there. But they are partnering with Uber for 2 cities, Austin and Atlanta. And when you look at internationally, Uber is partnering with a Chinese company, and I think they're already operational with that Chinese company in Abu Dhabi. And Uber internationally is probably going to partner with the Chinese companies, like in Mexico, Latin America, Africa, and places like that. That's a really great opportunity for Uber to grow into the robotaxi space. Uber decided, 5-10 years ago to get out of the robotaxi technology biz, and they had invested substantially, but it became an undesirable because I think one of their cars hurt or killed somebody, and they just decided we need to get out of that space. We can't be the best experience to the ride hailer and the driver and try to also be a technologist, like a developer of technology. And I don't think developers of technologies can also be great customer facing companies. Some can, but usually the two don't mix well. We'll see. It's not like NVIDIA is selling it to, NVIDIA is technology being sold directly to consumer. It's really, they sell their technology to other companies who create really great apps or really great technology. And then that gets sold to businesses and consumers. So I think Uber, for me, is setting up really well. I think it's going to do well in 2025. For the 1 year, it's pretty flat, but it's giving us volatility is my friend. Volatility to the prepared investor is a great thing. Here's an example. If you bought at the right times on Uber, you're up really nicely. Thank you, stock market. I appreciate when you act irrationally and give me the opportunity to buy Uber, let's call it 2 months ago, at a really nice discount and make 15%, or buy it, the August 5th. So that's 6 months. So there's been some really nice moments to buy Uber. And over the 5 year, this thing's worked 70%. Man, you could have bought Uber at $21 a share, be sitting on a 224% gain. And that would be over the course of, call it 3 years. Beautiful. Nothing to complain about. This volatility is my friend. If Uber drops again, I'm a buy. Uber is in that place for me. There's certain businesses that are going to be really valuable. I believe that Uber is going to be one of them. And I like their top line revenue. So they're profitable. They generate really nice cash. Their cash generation is really good. Analysts agree with me. A lot of things are setting up really well for Uber fundamentally. The stories that swirl around, I think the story that probably caught the most fanfare is the Tesla. Oh, Tesla is going to come out with robotaxi. They're going to take over. Well, first they need to get an operable robotaxi in the field. They haven't done that. They haven't even tested. That's going to take a while. Waymo's taken 15 years to get to where they're at. And right now their scale is nothing. They do very little rides for consumers. While Uber, more than 1 million people hail a ride on Uber every hour. Their scale is massive. They left Lyft behind big time. The revenue is really, really impressive. So I'm big on Uber. We're going to wake up 5 years from now. It's going to be 100, 200 billion in revenue. They're going to have more free cash flow. I love the whole sharing economy. Uber doesn't buy cars. They're not even going to have to buy technology. They're going to partner with Waymo. They're going to partner with different developers of robotaxi and just participate in the revenue creation and profitability and cash flow creation out of robotaxi. So it's a pretty good, enviable position for Uber. Just keep improving the experience. I used Uber recently. I took a trip about a week and a half ago. And of course I used Uber, and positive, very positive. And I could tell you at airports, like I flew in and out of LAX, and the whole they have a whole sector for ride hailing, and Uber occupies. There was like 3 or 4 full lanes to catch a ride. I don't even think I noticed Lyft there. And then there was one taxi lane. And Uber is like the dominant service at Los Angeles International. Every airport I end at, it's Uber's the number one app. So you become number one because you're more desirable by that consumer. If they can keep growing and keep that position, Uber is a long-term hold for me. And I will buy if the market decides to give me an awesome discount on this great business. All right. So that was Uber. Let's take a look at a couple more earnings that were announced. Pepsi's down. Pepsi is a good value stock, pays a dividend. We looked at this in the last couple of weeks. I'm not a big, consumer staple investor. I try not to go into industries where I don't think it's going to really reward me over the long haul. This proves my point. Over the 5 year, this thing's just done 3%. You've gotten that dividend, but man, you have not kept up with the market. The market's done way better than that. Over the 1 year, proves my point, 14%. So I wouldn't touch Pepsi or Coke or any kind of, consumer staple type stock. Market doesn't like something they saw. These guys are slow grower. For the full year, they grew up 0.42%. The last quarter, they contracted just a tiny bit. But that's what you're buying into. You're buying into a non-growing, slow growing. I mean, they're growing at the rate of inflation. If that, this past year, they didn't even keep up with inflation. And really, this is a stock that a lot of investors recognize the brand. Pepsi. Who hasn't had a Pepsi? And it has a reasonable, market cap. It's been around for a long time, pays an attractive dividend, right? But it's not the right investment for me. It's not the sector of consumer staples. It's not a sector I dabble in a whole lot because the returns are just historically not as good as other places like healthcare, technology, consumer communication services, financials. Those are sectors that do far better. So I'd rather just know that, hey, I'd rather buy into companies that are just going to perform better. So Pepsi's not having a good day. Not a real desirable stock for me. KKR, private equity. And, Shadow Guy has been asking me about private equity. I don't dabble a whole lot into it because it feels a little bit like a black box. What are they into? Like, what are they making their investments? It seems like these companies will either surprise me and to the upside or to the downside, but I hate the surprises. I'd rather kind of have a sense like Uber. I know what Uber does. I know what kind of business factors favor them or are going to be problems for them. And KKR is a little bit too much of, I have no idea how their investments are going to do. It's a little bit of a black box and I have to really trust their guidance. Looks like they are down 6% today. Really big market cap, 145 billion. Forward P doesn't look too bad. Analysts think it's priced too high. So that's KKR. Now a business that I've tried to buy into Spotify for a long time, and it's always too expensive. And analysts think it's too expensive. But they are like the dominant company in streaming. I should have just bit the bullet, just paid up. It's a great company. And they've really just crushed it. These guys have been under threat that, hey, Apple Music's going to take some of their market share. I don't think Apple Music's doing anything. Man, these guys are crushing it. Go Spotify, every metric. And I love the Spotify experience. I have it. I play it on, when I drive. I like how they've added podcasts to the service. Everything. I like Spotify a lot. And they're up 9.45%. They are growing really nicely. Their revenue is still a little low. 15.6%. Let's take a look at their gross margins, 30%. I guess they have to pay the artist a lot of money. It's not like a pure play software company that's going to be at 80, 90%. And free cash flow is decent, 2.2 billion. And I say decent. See, this is what's also prevented me from buying this stock is if you're looking at buying it in 2022, just really no free cash and then a little bit of free cash. You're paying $100 billion for a company that produces $2 billion of cash. That's really expensive. So this one just, Spotify doesn't fit my investing approach, my investing discipline, my recipe for success. I'll continue to be a happy Spotify customer, but it's just not the right investment for me. If a competitor comes into the market, this stock could really sell off, obviously, but their fundamentals are just not strong enough on the cash flow side and their earnings per share side to get my investment. But if you're a Spotify investor, congratulations. This thing is just crushing it. Awesome. Spotify. Man. All right. So those are the big ticket items on the earnings report. Is there a stock you want to talk about? Is there a stock that I haven't covered that you think is interesting to cover? Maybe you're thinking of dropping a big investment in a stock. Put it in the chat. And Mike, the dividend investor guy, has a comment on Pepsi. Been disappointed with Pepsi. Yep. Till the end. Good to see you. Hope you're doing well. You want to look at Deck. Is that Deckers? Let's take a look. Deckers Outdoor is a footwear company located in Santa Barbara, California. Their original product was this sandal, and the sandal was called Deckers. They were brilliant in acquiring this company, Hoka, which is a very comfortable shoe. This shoe was designed for ultra marathon runners who are running like 100-mile races. And they needed a really, really comfortable shoe. And they look a little funky, but they're so comfortable that people don't care about the look. They will buy the shoe because it's so darn comfortable. That's a majority of the business. The other lines that they have is UGG. If you're familiar with the UGG boots that came out of Australia, nice and warm and comfortable. And this company has been on fire. En fuego, as I would say in Spanish. And these guys have just been crushing it. Look at that. Well, the 1 year, not so much. Looks like they're slowing down. But over the 5 year, that the Hoka sales have really, really flourished. So what's going on? Looks like the 1 day, 5 day. So why are they down 19%? What did the market not like? So it looks like, when did they announce? January 30th. So they made their earnings announcement, and they were on a really, nice growth trajectory. They're still not that big. Okay, keep in mind, Nike is massive. Let's see what Nike is doing from a revenue standpoint. So Nike's $50 billion in revenue. These guys are $114 billion in market cap. These guys are 1/10 the size of Nike. And their market cap is $26 billion, where Nike's $118 billion. So the revenue, let's take a look at the quarterly. You see that it is slowing down. It's still really impressive. A 17% still good. Maybe they guided that, hey, people are the sale of Hokas is slowing down. And look at this free cash flow. Nothing. Just terrible. Gross margins, very good margins. For the footwear, 60%. That's excellent. Why the heck are they not producing more cash? What is the problem? One more thing. Tariffs. Tariffs will hurt Deckers. They don't manufacture these shoes in the United States. They manufacture them in China and other places. So this thing's kind of fallen off a cliff. I don't like the free cash. Analysts look at earnings per share, and it looks really good. I think it's impressive that they've grown the Hoka line and their other shoes quite well. But this is footwear. This is apparel. This is going to be interesting to watch. I think that the Hoka brand, I don't think it's like Nike. You have people wearing them, whether it goes, Nike sold across different income levels, society levels. Kids wear them, older people wear them, middle-aged people wear them. It's across the board. Hokas are like middle-aged footwear of people that have high income. That's their marketplace. So I think that Deckers might see a drop in demand just because how many pairs of shoes can you buy? I have too many shoes. I have, I'm not the only one that's a consumer of this type. Is I see a nice pair of shoes and I buy them. Bought myself a new pair of Nikes. I didn't need them. I just really like them. And boom, I'm rolling around with a new pair of sneakers. My son gave me a pair of really nice Adidas for Christmas. Awesome pair. And I find it hard to wear my damn shoes. It's like I have too many shoes. And I think that's what Decker's going to run into is how many shoes can a human being have? At some point, they're going to stop buying shoes because they have too many shoes, like me. And Deckers does not have the luxury of selling across all different income levels, societal, categories, young, old, middle-aged, age categories. Nike sells everywhere, and they have a flourishing apparel business. Deckers doesn't. And they're kind of a one-trick pony. They've had an awesome 5 years, but the rearview mirror looks great. Looking through the windshield, not so great, especially since investors are realizing, oh, no more hyper growth or high growth, good growth, and no cash. Well, Deckers is something that I've stayed away from, probably will continue to stay away from. Bonsai. So Shadow Guy. So Bonsai. So we looked at this. We looked at it twice. Oh boy, look at that. My comments on this were not favorable. This is a marketing technology company, and I think these guys had like no revenue. Yeah, no revenue. They want to acquire some businesses. This is like, stock price of $1.65. It's like buying lottery tickets. If it hits, boy, I can 10x my money very quickly. If it doesn't hit, then it's kind of dead money. Maybe they go bankrupt. They only make $4 million of revenue. All right. So on shoes, yeah, I'm with you there. But even a lady, how many shoes can you buy? Maybe a lady buys 100 pair. Once that lady buys the 100th pair of shoes, her I guess her desire to buy more shoes probably goes down substantially. Not because her husband or her partner is saying anything. It's just because physically the space, like my closet, I have too much stuff. I have to constantly donate stuff. That's life. Bonsai. Wait until it's $1.25. Yeah, man, go for it. Just don't forget about us when you make $1 million on that trade alone. Good luck with it. I hope you make $1 million on that trade. All right. Banco Santander. I think that's a Spanish bank, and BBVA. I heard about this bank a while back. I heard their valuation. Yeah. PE is 6. It's a buy. What's the stock done? Yeah, it's done okay. 22%. Dividend of 4.55. Getting it done. Now, banking, this chart, there's some explaining to do, which is, of course, we had a pretty good downturn in 2022, and then we had the big banking scare that was driven out of Silicon Valley Bank having a run on its bank. So you've had a couple of things going on here. They're in the rearview mirror, but looking forward, I think banks are being set up quite well by in the U.S., the U.S. administration setting up U.S. banks. I can't comment on, Spain, if they're doing the same thing. And I think these guys are out of Spain. Hopefully I'm not wrong in that. Last time I looked at them, from memory, I think they're out of Spain. The PE is super low. Man. How can a PE be that low? Revenue expanding. Looks good. These banks are looking good. Net income growth. Oh man, banks. Banks are looking good. Banks did great in 2024. And I don't think they're going to stop doing great. I think they're going to continue to do well. Their book value growing nicely. Not really fast, but nicely. And they continue to grow comparing 23 to trailing 12 months. They continue to grow. This looks good. Looks like a good investment. I own Citigroup and I own Robinhood, which is not a bank, but they do banking now. And I started buying into New Holdings, and I'm glad I did that. New Holdings is beginning to work. So this one looks pretty decent, if not good. And then BBVA, I am not familiar with. Banco Bilboa, Vizcaya Argentaria. So this is out of Argentina, huh? Wow, look at that rise. Nice. This came up nicely. Okay. They announced on January 30th. The market did not the market kind of liked what they saw, but something kind of brought down the stock price on Monday. So this one I haven't done much with. I mean, this is the first time I've ever looked at BBVA. 4P looks good. Big high dividend. Revenue is growing nicely. I think with banking, I like to know the economy where the bank predominantly is working in, or at least kind of know what to expect from an economic perspective. These guys, I'd want to know where the end markets are, like where do they do business? Sounds like Latin America is mainly their area of doing business. Book value growth. This one's kind of went up, came down, and it's gone up over the last 5 years. So that's good. So I'm seeing good fundamentals across BBVA as well as SAN. Good fundamentals. Couldn't argue with this bank being listed as a buy by anyone. So it looks pretty decent. All right. So I think I got through the comments. We are 13 strong. We've had a good population of viewers, probably going from 10 to 20 at any given moment. Let's go back to take a look at the market, see what's going on, what is working, what's not working. I'm seeing more green. I'm seeing more green on the screen. Technology, the semiconductor space is having a good day. Apple in the green. Amazon in the green. Google in the green. Nicely in the green. Meta decided to keep rallying. Meta is just crushing it this year. They're the number one stock. One thing I didn't look at was these are the most valuable businesses on the stock market, at least the most valuable stocks based on market cap. And if we look at today, looks like it's green across the board except for Berkshire. And if we look at year to date, NVIDIA is in correction. Microsoft, negative. Apple, -9. Amazon's doing well. Google's doing well. And look at Meta, the number one player on the top 10 stocks, up 19%. Very good. Good job, Meta. Tesla, year to date, down 5%. Broadcom, down 4%. Walmart, look at Walmart, up 10%. Very nice, Walmart. JP Morgan, up 11%. Nicely done. So when we look at Meta's just cleaning up. Go Meta. All right, energy sector is picking up steam. What's going on? There's probably a story out there. There's probably a story out there that's telling us what's going on. Ooh, the battle between China and the US picks up a little steam. Well, let's take a look at oil prices. That's what I wanted to look at. So oil's up just a tiny bit, but oil companies are rallying. So the Dow is up a little bit, S&P, the Nasdaq's in rally mode, and small caps are in rally mode. All right, that looks good. I am good with that. Okay, so healthcare is sold off today. Looks like Pfizer's already in the red. Huh. Merck way in the red. Only J&J is keeping its value. Okay. Good day to own the big names. Google is making it happen. NVIDIA, Apple, Amazon, even Microsoft is making it happen. I'm going to be able to sell my last remaining shares of Microsoft. I decided to get out of that stock. I think the story changed with DeepSeek, as well as their investment in CapEx was excessive, and it really changed their valuation for me. So I'm gonna get on the sidelines on Microsoft. I'm gonna sell the shares that I still have for that stock. I'm gonna hold. I'm shorting this stock. I'm green on my position. I'm good. And then this one here, very interesting. I think this is way overpriced, Broadcom. Apple, we'll see where that goes. And then with energy, I had been selling off some of my Chevron stocks to just own too much of it. I might sell a few more and then stop selling. And since the stock price is up, I want to keep a certain dollar amount of Chevron. And a day like this is going to put me above that dollar amount. So create a little bit of cash. Nothing wrong with creating some cash, since we've been on a really nice market for more than 2 years now, probably 2 years and a quarter. So create some cash, have some dry powder, be ready to buy some stocks that are discounted. All right, so we saw how the heat map is looking. Let's see which sector. So energy's doing really well. Is this tariff battle going to become a reason why oil prices would go up? Potentially. Communication services, we saw how Google was working. Technology, we saw NVIDIA doing well, Apple doing well. Materials, consumer discretionary, industrials. Healthcare down here, but not too bad, 0.57. Okay. All right. So that's where we're at there. All right. So that is it for the stream today, guys. So, it looks like we got a couple more questions. 1 second. So it is going to be a heck of a year. And I hit the wrong one. It's going to be a heck of a year. Absolutely. So Elf is Elf. I think we looked at it. That's the beauty company, right? Yeah, Elf Beauty. Wow. Yeah. Year to date. Wow. Down 30%. Yeah, that's a tough one. So yeah, I saw that Trump is going to create a sovereign wealth fund, and one of the key assets will be acquiring TikTok and putting that in there. Fundamentally, I don't like it. I think government should be removed from business as much as possible. And you're on principle, I don't like the idea of the US government owning stock in companies and owning a whole company like TikTok. I don't expect that's going to work all that great. Who's going to run TikTok? Do they really have, like, in the stock market, if a stock like PayPal there's a level of management being responsible and being held accountable in the public markets. And the scorecard is that stock price and how well they grew the stockholder wealth. Well, when you have a company that's owned by the US government, will there be a strong, incentive to be accountable? Will you have the measures that our public markets do really well? It's efficient, and companies are valued by investors, like everybody who's on the stream. Once you put it into a sovereign wealth fund, I just don't like it. I don't think on principle it's a good idea. But it's that I don't I don't I don't participate in that a whole lot. I just don't like it. Overblown. Adding more elf. Good luck. Good luck. All right, guys. So thank you for joining. Really good stream. Let's see how things play out. Looks like we have a lot of green on the screen. Should be a positive day. I don't know that tariffs are going to be the main storyline today. I think it's going to be a little back to normal, which is all these big valuable companies like Google and Amazon, Nvidia are going to flourish. That's a story we've had for 2.5 years. Keeps working. So as an investor, buying at the right time is a good idea. And when any of these businesses get sold off, like Amazon was sold off severely in 2024, I bought. Meta was severely oversold in 2022. Opportunity. Even Google, in the last year and a half, there's been moments when severely oversold. Buy. So we'll see how things play out today. I'm going to try to stream tonight at 8 p.m. Eastern, 5 p.m. Pacific, because Google Alphabet's going to announce, and that's my second most valuable position in my portfolio. So I will definitely be all over that. There'll be some other news too, I'm sure, that I could talk about, and it'll be interesting to talk about. So everybody, thanks for tuning in. I appreciate your support. I appreciate your comments. Good luck with all your investments today. I hope you have a really nice day. Take care.